Hey traders, I just received a quite an important question from one of the traders. Adam posted on YouTube. Hi Shiv, I lost all my 3 weeks profits on Euro USD in this week. Can you teach as how to cut losses? This is something I think I've just very briefly touched upon in some of my videos, but never specifically. And let's look at Euro USD this week, especially I think in the last 3 days, last 2 days. It's only been 3 days this week. The last 2 days, this movement here, right? And what actually happened? And I think Adam made, if I'm assuming here, I assume that you've made some losses here, okay, which is the movement that happened yesterday. And let me explain that how to limit that. And look, don't feel bad about it because I've learnt that the absolute hard way as well. So the one thing with forex is this: um, it will strengthen your resolve internally. It will make you as hard as a freaking rock, because we're all organically emotional people, like beings, emotional. Humans are meant to be emotional to some extent. And what we find is that even if we've got strict criteria in place, that at any given time there's so many different influences, so many different variables to us, energetically speaking, that when we jump in front of our charts, we're going to make some mistakes, right? What we've got to do with forex is be so hard within, and that's to do with ourselves and criteria, is that it doesn't matter how good the setup looks, unless it's your setup, you simply just don't trade it. Okay, that's how strong your resolve's got to be. So it's like saying, I want to lose weight, and I don't care if there's Donald Trump's scrumptious, fluffy piece of chocolate cake that's sitting right in front of you. It doesn't really matter. Your goal is to lose weight. It's the same thing with forex. Your goal is to make a killing off each setup, each trade that you take, right? So don't feel so bad about it, because I have to learned it the very, very hard way. And there are times when I will still learn it if I'm cocky or if I'm emotional about something, and I will just take stupid setups. It's normal, okay? But here's how we get over that, or here's how we ensure we don't do this again. So let me zoom out Euro USD on a 15-minute chart, right? Clear observations will say to us, okay, that Elliott wave technology will say, or Elliott wave structure should say, that you've got the middle wave, which is the third wave, should be your largest run, correct? Now, when we're looking at this, we're thinking, okay, we're seeing three runs here, or what looks like three runs here, and without going any further back, what I can say is this is by far the biggest run there probably is, right? I could go on a higher time frame, and this is what I'm looking at. Okay, we've had some degree of consolidation here. This is when the market gapped up, consolidated, and so what I'm going to do is, after this actual gap, just quickly look at previous structure. Okay, so after this gap, I'm going to count this as a correction. This was a correction here. I'm going to count this as a new Elliott wave structure, right? So what I'm saying is that this to me kind of seems like a bit of an odd Elliott wave structure, because this movement here should be far smaller than this one here. In actual fact, wave 3 should be 1.618 times the first wave, that run that happens, correct? So we look at that and we say, okay, there's something odd that's going on here. So I'm going to make an assumption that this is the third wave, okay? And then this is wave 4, and this goes into wave 5. Usually what I find, and people usually say, okay, this is the fourth level going up. It's not. What I find is that the market, once it's reached the peak of the fifth wave, what I find is that there's a slight correction above that, and that's where I start looking for my double triple tops, right? Now, here's where we are, double triple top. This is what I'm expecting. Now, two potentialities can happen, right? And let me draw them in. The first one is this, that this market is going to go up, do a double or triple top for me, come down. First place that it's going to hit back to is the EMA 50. Second place is going to get to the 200, right? We're expecting that there's going to be some sort of a retest off the 200, right? Whether it's one candle, two candles, slight candles, whether it's just a slight wick, something's going to retest. So it does it, right? Early New York, and then it comes down, breaks it. So we've got that break. This is another bit of a retest, right? Doesn't quite make it out here, but it's another bit of a retest. Now, in my simple forex strategy, what we've got now going into early Asian session yesterday is 50 is coming down to cross below the 200, right? So what are we saying? That market will come down, it will consolidate, and then that price is going to feel lonely and is going to want to go back to the 50 and give it a nice cuddle, okay, before it comes down, right? If it goes back up to the 200, even better, correct? Now, in line with this, what we're also expecting is that price, if it's going to be a new Elliott wave structure reversing, what I wanted to do is come back up to hit 618 of my fib lines. Unless it does that, I am not still certain within myself that this price will move down this way. Okay? Because there's no guarantees. In Forex, there is absolutely no guarantees. We're learning how to utilize strategies in the absolute right market conditions. A lot of people take strategies and then they will blindly apply it, and then they'll say the strategy doesn't work. The strategy works. What's not working is the person that is applying it, right? So that was the first potentiality. The second one is where market goes up. This is the top of the fifth wave, or the correction off the fifth wave. We've got a triple top, market comes down, and what we're expecting is corrective waves. So market will go this way, come this way, and then it could break past this and continue going that way. That's the second option. And then up here, from here, it's a new Elliott wave structure that establishes. So that's our expectation, right? So two possibilities of what the market can do. Now, here's how we get around that. First of all, we know that market's going to come down, it's going to consolidate, right? We know that there's also the potentiality that's going to consolidate, don't go anywhere near the 50 or the 200 and just go boom, because the market's known to have done that in the past. So what we do is we wait for this cross to happen. We wait early Asian session for the market to start consolidating. What I do when I come onto and have a look and say, okay, I'm a happy boy because there's a setup that's happening that I recognize. So I'm going to drop a horizontal line at the bottom of New York close. Okay? And I'm going to explain why soon. Then I grab my fibs and I will look at that previous high and current low. So this previous high, this peak happened here. And I'm going to draw that into the current low. And I'm going to look to see two things. One, where is my 382 line and where is my 618 line? Right? 618 line is more important for me. It's my absolute best friend. Whereas my 382 line is like a minor crush, right? So here, actually I should have said the 618 line is the love of my life, but the 382 is minor crush. So what I'm finding here is, and I'm looking for a number of things. One is that when the market is consolidating, I'm expecting that it's going to eventually do a break of this line down here. If it's not going to go here 382 or 618, I'm going to expect it to do a break of this line. Okay? And I don't mean where it's just doing wicks to the low. I mean a solid break, a close below. But that it's also not my entry, because I don't know if this is just going to close below and then go boom, back up again. I know that I'm expecting market to come this way. Right? That's my favorite. That's the one that I'm absolutely waiting for. But I also know that market could continue going this way, right? But the behavior down here would be slightly different. That's what I'm expecting. So this line is going to show me two things. One is that a break below it, and then a retest, and then a confirmation candle going south, and it'll be nice, slow, and steady. And that would be to me saying, okay, this market is about to head south. And what I would do is I will zoom out again and I will look to see where structure has left clues for me. And I'd say, okay, for some reason I've got this line drawn in here. So this would be the next correct place. Maybe move it up here slightly for the market to come back to. So if this starts pulling down, I'd be looking for a bounce off that line coming down and saying here's my entry. Market most likely can come to this point here, right? So market didn't do that. What it is doing is hitting a lot of wicks to my line here. So what I do during say late Asian session is readjust that a little bit to say, I do want strong confirmations. I don't want to play around here. I want strong confirmations that the market is going to head down. I want strong wicks to the high and then aggressive moves south, right? But what I'm also expecting is that there's chances that the market's going to go back up, do a 382 hit or a 618 hit before it starts to come down, right? So these wicks to the low here is what's initially preventing me from taking any trades, right? The other thing is, once the market moves up aggressively, hits my 50, has it done the number of moves that I wanted to do in order for me to even contemplate a strategy? And the answer is no. It still hasn't gone anywhere near my 382 mark or 618 mark, right? So what I'm expecting now is that market will continue moving. Okay, this one moves, this starts coming down, and with hindsight, we look at this and say, yeah, we could have traded this. Wrong. We've got our EMA 50 here, because this could have also just been a retest of the EMA 50. I still have room to move up to 382 and 618, right? This is not my setup. It's still not my setup. It looks nice. It's still not my setup. So if market comes down, stalls on the 50, what we would expect it to do, and then an aggressive move south again, right? Do we take our entry here, right? This candle would have opened up and it would have been a red candle at some point. Many of us, and admit it to yourselves, you would have taken an entry straight here, correct? I would have done that in the past as well, been burnt, right? Lost thousands of dollars in that regard. So I've learnt my lesson and I've said no, until the market breaks past this line here, which is the low that's been established so far, does a comfortable retest, proves to me that it loves me and it wants to go in the direction that I want it to go in, I'm not going to take a trade. Because the market is also known to kind of just hang around and range there for multiples of sessions. So that's how we start avoiding the actual losses. Market starts going back up. Right now, here's what can happen. We get a hit to the 200, right? We get a very strong wick to the low as well, so that kind of confuses me, right? To me, this would be like a hanging man, and hanging man says this market's going up, right? And then we've got two hanging men, and then we've got a wick to the high, market's coming down. Do I take a trade here? The answer is still no. Why? Because the market still has not penetrated below here. It doesn't matter if it's hit my 382 line, it still has not penetrated below this line here because I've got a ton of wicks to the low on the left here, right? Market goes up and starts coming down slow and steady. What am I still expecting? I'm expecting a complete break, a complete close below this, and not just a close. I want a retest. On a retest of my line and an aggressive candle going south. And even then, I might even think to myself, is this creating a W formation, right? So what I might do is also be a little bit cynical and let me get rid of it. Actually, yeah, let me just get rid of this. I'm going to be a little bit cynical here and say, let me grab my fib lines, right? And I'm going to see where this price is coming back to. So is the potential, I'm going to do two. One is from here to here, and I'm going to say, is this coming to do a W formation at my 382 mark, or even come down to, and I highly doubt it would have penetrated past this point, but if it's doing a W formation at my 382 mark before it goes up, then I'd say this was corrective structure ABC off the fifth wave. And so the market's heading up. That's what my expectation is, right? So that's why you're cynical and you say you don't just put an entry in and you sit there. Now I go back here, market, all it's doing is constantly bouncing off my line here. So I've got multiple hits to the low, right? That also confuses me. So what I do, go back here, draw my fib structure back in, okay, and I always do it to previous high to present low here. Even if price goes below this, I don't really take that into account. Okay, now you see price has gone up, and closer of New York session, it hit and bounced off our 618 line, and right now it's done a slight retest, market's going up. Okay, this analysis down here, where you kind of are very strict with yourself, that is what's going to ensure that you limit the losses. Okay, losses will come. You will learn how to limit them, and then eventually, the 10, 15 different setups that you were doing, you probably rip that apart, come down to just your one or your maximum 3 favorite setups that happens, and then you will teach yourself how to be patient in waiting for them. Okay, and then from that point on is where you absolutely nail your entries. Over here, yes, we can analyze and we can say two potentialities: market's going, this is correction, market's going up, or market's going to hit 618 or 786 and start going down. This could also end up being a wick. We don't know at this stage, right? Could come down, or this next candle could be a strong red candle coming down, and that could be confirmation of an entry going south. It's Euro USD currency pair, Asian session. It can move during Asian session. Do we want to trade it during Asian session? Absolutely not. Stick to your guns in that regard, and that's how you limit your losses. Mate Adam, I sorry to hear about your losses. Hang in there. But I'm assuming that yesterday something like this would have been confusing. Okay, you were shorting the market. Market probably went up, confused you. But for my liking, yesterday I would have expected market to go up slightly. Asian session, bounce off the 50 and find its way above the 200, going to um, say hello to the 618 mark before it came down, and I would have expected that. Even if because it was so far, maybe London session would have gone up. I would have expected maybe a double top formation to happen um, early New York before it comes down. Okay, look at this, 34 seconds to go. It is respecting the 618 mark. So for those of you trading binary on the 618, this helps. Um, and even with forex right now, this is creating a bit of a double top. What we wanted to do is to do a aggressive red candle coming south. Would I take it early Asian session? Hell no, because this could come down, could consolidate for a while. I'd want to do a hit to the high again, London, before I consider it going south now. Now, this rule here, Adam, um, now that prices hit our 618, we wanted to kind of do a specific behavior um, before it comes out, which means aggressive low candle. This has to be a lower close than all of this. Again, I wouldn't take an entry straight off here, because even if this market does move 20 pips now Asian session, it doesn't matter. It will possibly still be a risky trade. So I will wait for closer to Frankfurt or London Open for it to possibly, if it does end up coming down, for it to do a retest before it does another fall. Okay, so do that. This only applies down here when the market's consolidating. All right. I hope that's made sense. All right. All the best.